Hey, thanks for tuning into JEDIOSHI today. It's Thursday, January 27th. Hope you're doing well. I have something special for you today. Today we are going to cover the iOshi trading system, at least from a trade process overview perspective. And there are a lot of details behind this that we'll get into in the future, but I wanted to introduce something to you that you may have not thought through before or may have never been introduced to before. And so this is really for people that really aspire to think like traders and to start taking action yourself and to start digging in on what the process looks like. This could be applied to day traders, but largely the process works on any time frame. So it can apply to scalpers, to day traders, to swing traders. The process is largely the same. The lower time frame you go, the more often you do this. But I wanted to walk you through the trade system here. I have 10 steps, and just to talk through a little bit about some of the characteristics of each one, and to try to get you thinking about the process. A lot of people think that trading is just seeing a setup, seeing whether it's a setup or an edge on moving averages or a break in trend line, and taking a trade and working it out. And I want to show you a few other things that are as or more important than just your edge. And so let's walk through this. This might be a little bit lengthy of a video. This is just purely a presentation. But some of these ideas I wanted to share with you to get you to think about trading systems, the trade process, and kind of where you are in the evolution. So let's dig in. Okay. Step one in the iOshi trading system is to wait. You simply sit there and wait, like a hunter in the blind, waiting for something to happen. You're ready, you're prepared, and you wait. So you wait, and what do you wait for? You wait for your confirmed signal for trade entry. Not a false signal, not a slight signal. You don't say, "Oh, I think this will turn into a signal." You wait for your confirmed signal to flash for you. Now, in my process, I trade a lot of trendline breaks. Mostly that's what I trade. I have a process that has trendline break coupled with an RSI break, and that's my signal. And so you may have a different system. You may have a different signal system. It may be moving averages, maybe Bollinger Bands, it may be, whatever that is for you. But step one is to just wait for your confirmed signal for your trade entry. Step two, you take the trade. And one of the most important things here is you take your trade with a predefined position size. And this might be, we talked a little bit yesterday on the live stream about tiering. Tiering your setups. If you have a confirmation on maybe a low time frame, you may have in your system, you may have different levels of position size. But step two is you take the trade with your predefined position size. And that's this one, and step three is about the end of your decision making process. So you wait for the confirmed signal, you take your trade, whether that's long, that's short, you enter the market, you've made your decision. The last thing you do is you immediately apply your stop. And this is at a predefined risk. You have to predefine your risk before you even make the trade. Now, sometimes that can be on the chart. So say, for example, on a trend line break, you look back to an older, say a high point or a low point, and you say, okay, what invalidates my trade idea? What makes this wrong? If I break trend, but it's just a small time correction and it keeps going, then I'm wrong when this happens. So you apply that stop at that predefined risk, either whether it's a number of ES points, a number of dollars on the Bitcoin chart, or any other trade. So these three steps: you wait for your confirmed signal, you take a trade with your predefined position size, you immediately apply your stop. Those three steps are the extent of your decision-making process. At that point, your decision's made, you've taken action, and now the rest is up to the market to play out. And as you go, this is kind of a big area, and it's about trade management rules. So these are things like, do you use a trailing stop as your trade develops, and say as your trade grows out to from your entry position. Say that was, for example, on trading futures, S&P or ES. Say my -1R is 5 ES points, or say 10 ES points. Okay, my defined risk is 10 ES points against me. Okay, now say the trade develops and it runs to 10 ES points in my favor. So one of my trade management rules may be to say at that point, when I'm 1R in my favor, I might move my stop to 0. But all these rules and decisions are made before you're in the trade. That's one of the most key things ever, is that in your system, you have to eliminate your decision making through emotion on the fly. Whether that's emotions of, mostly it's fear, honestly, but learning to trade without emotion. When you trade your system, you will find that you no longer trade emotions, you trade your rules. So you wait, you take, you apply, and then you work through your trade management rules. How long do you let the trade run? It's all these trade management rules are predetermined and established even before you make the trade. So that's number 4, applying your trade management rules. And number 5 is you wait. You're patient. You let the market work for you. You've already made your decisions. Now it's up to the market to work for you. And if you have a good system that you've back tested, that you've paper traded, that you've worked over time, then you just let the market work. And you're patient. So either you stop out, based on, say, your trade management rules. Say you don't move the stop. And you say, I'm going to go for, there are different rules. There are different systems for trade management. And at some point in the future, we'll get into that. But, either say you stop out at -1R at your risk, or you stop out at 0, or you've worked your stop up and you stop out in profit at some level. But you let the market work for you, and being patient. That's a big one. Number 6, this is when you exit the trade and you record your result. It's as simple as that. The trade either works or it doesn't. And this is a mechanical application of a trading system. Either the trade worked or it didn't. You worked on your size. You entered with your predefined size. You applied your stop at predefined risk. You applied your trade management rules, as you already had described, and you let the market work. And again, you exit the trade. It's a winner or a loser. The next step is you study it. And what you want to study here is, how well did you follow your rules? Did you violate your rules? Did you move your stop when you shouldn't have, or when it was in a violation of your rule system? Did you let emotions take over? Did you start thinking what you think, believe, or feel the market is going to do? Did you take early? Did you take profit early because you wanted to just scrape profit? And did you violate your trade management rules? So number 7, again, study your trade. How well did you follow your rules? Number 8. This is when you get into your statistics. And this is where you understand that you're trading on a series of trade approach, not trade by trade. And we'll get into any one of these steps you could write chapters about. And again, this is just a broad paintbrush overview of what a trading system is, and how to start thinking through that in that manner. So again, you study your trade and your result, and know how well you follow your rules. One of the things there, again, is is to keep a journal. Go back and record how you felt. How were you feeling when you took the trade? How well did you follow your rules? And then look at your distribution. You have to start thinking of trading in a distribution. say 20 trade groups, sometimes more. But when you look at, say, a group of 20, you may have a win-loss ratio. You may have a 50% win ratio. So you may have 10, on average, or in the last group of 20, you may have 10 trades that were winners and 10 that were losers. But hopefully your losers were small and your winners were big. And you start looking at your overall performance. But it's in a distribution. And it's not trade by trade. So you look at your statistics. And there's a lot in this too. Because you can get into standard deviation, averages, effectiveness. Like there's a ton in this. And this is where it gets pretty exciting to really measure your system. And again, how well you were able to follow your rules. And how well you're able to mechanically apply your predetermined rules to the markets. So number 8 was evaluate your trading distribution and statistics. Number 9, rinse, wash, repeat. You do this process over and over for every trade. You take it, you wait, you apply your stops, you apply trade management, you let the market work, and then you exit the trade and record the result. You study it, you evaluate it, and you do it again. One thing that is important to do is that you focus on improving one thing in every new trade or trade series. I try not to change too much until I have a series of trades because I want to isolate and fix variables that might move and understand my distribution and my rule system for a given variables. For example, time frame. The rules in my system on a low time frame chart that I'm trading and taking signals on might be different than say a higher time frame. So my trade series, I'm going to fix my time frame, but I'm going to right now I'm really working on rule following, setting my stops, letting the market work, be patient, letting it run. What I found for myself was too often I want to accelerate my 20 trades. Meaning I want to pad my distribution curve with as many winners as possible. But what that does is that makes me take way early, right? I may take at 1 or 2 R, or maybe a 3 or 4 R, and that's okay. But then I have losers, and you shouldn't have anything less than 1 R if you're applying your stops, right? But if you start taking 1 R, 2 R, then you're going to sit on the sidelines and watch that trade that you confirmed and you were aligned with the market and it ran for you, but you did not take it at 10R, 20R, right? So that for me is what I'm working on is number 5 really, is let the market work for you. Be patient, right? So don't be in a hurry to try to get your distribution, your statistics. Really what you can find is that if you're right directionally and your signals are good and you're in line with the market, and you want to let the market work for you. So I would say the next kind of big idea is, or I've said it a couple times here, but the moment you break the rules is the moment you lose. If you trade on emotion, if you trade what you think, what you feel, what you believe, what you think the market should do, what someone else thinks the market should do, if you take a trade based on what somebody on Twitter says or what somebody else says, you're not trading your system. So you have to follow your rules. And the moment you break them, the moment you violate your, say for example, your trade management rules on stops, the moment you decide to take a profit and just say, I'm just going to take it because I know for some reason, I know this market's going to turn. Well, you're operating under emotion and you're operating under what you believe. And that's when you lose. So as you keep your own score at home, your score really is how well you're following your rules. And the moment you break them is the moment you lose. Over time, you will find that this is the path to being consistently profitable in your trades. This is how the pros do it. They trade on a distribution of trades. They follow the rules. They don't break the rules. They have the rules for a reason. They enter on confirmed signal. They have predefined position sizes, predefined risk. They work through their rules on trade management, and they're patient. This is how the pros are pros, guys. But it's not rocket science. And that's what I wanted to present to you today. This is a trading system. All these parts and pieces. Again, we could do, and we will over time. And I'm working to kind of package this as a training. But this is the trading system I'm working on, as a day trader. And this is what it looks like. So again, a lot of people think that, trading is just, look, I see this MA cross and that's a short signal for me, so I go short. And then I figure it out. It's a lot more than that. It's a much bigger process. Not rocket science again, but there are some very important parts that aren't generally known and generally talked about. So that's it, guys. That's the trading system overview of the process. Wanted to present this to you. And if you enjoyed it, please like the video. Please comment below. Give some feedback. How are you doing on your process? How are you doing? Where are you on the process? Where are you on the path? I hope this helped you at least to understand what the path might look like and understand what some of the things to be focusing in on might be. So please like the video, subscribe to the channel. Please follow me on Twitter. It's at JEDIOSHI. And I'd like to introduce you to the community of people. We're learning to read charts, think for ourselves, be successful traders in any market. And without further ado, have a great day. We'll catch you next time.